podcast where we put you on the map. This is Ron Costa broadcasting live from the Mappable USA studios here in Las Vegas, Nevada. And folks, today we're going to talk about tokens in the energy field. This should be very interesting. We got a repeat guest. But before we get going on this, let's introduce Vicky Hutchmala from the World Token Market. Vicky, how are you doing today?
Hey, Ron. I'm just doing fabulous like usual. And now in Vegas, we're getting into the 80s, so we're heading right into summer where we all love it. And we have an excellent guest today. We're going to talk about oil and gas, tokens, and it should be very interesting. Let's go.
You know, Vicky, you talk about the prices of gas going up and the temperatures going up, and we're going to explain this a little bit today and talk about it a little bit more from a tokenization perspective. So let's introduce Alastair Caithness. He's the CEO of Ziyen and Energy Tokens. Alastair, welcome back to the show. How are you doing today?
Yeah, I'm doing great. Great to be back on the show, Ron and Vicky. So it's actually 90 degrees for me yesterday down here in.
Geez.
Well, not in San Diego. So, but I live 20 miles from the coast, so it's like, you know, I'm in the edge of the desert basically. So it's a bit further south than you guys in Vegas. So we do get a lot of sort of extreme weather, whereby if you went to La Jolla, for some reason they've got it set at 75 every day. I don't know how they managed to do that, you know.
So yeah, but you get to look at the beach. You get to look at the beach, Alastair. We just get to look at, you know, Joshua trees.
Oh yeah. Well, I'm 20 miles from the beach, so it's like I don't actually go to the beach anymore. You know, when I first came here, married my wife and was coming back. She's from San Diego. Used to go to the beach all the time, but now I live here. I never go to the beach anymore. You know, so it's one of those things. It's,
you take it for granted, right? Yeah.
You take it for granted. I like going in winter when there's nobody there.
Exactly. That's like we never go to the casinos, even though we've been here forever.
Alastair, you know, the last time you were on a podcast here, we got a lot of good reviews out of the show, and I asked people what they liked best about it, and they said, "Oh, we just love his accent."
Exactly. You know, you don't listen to what I'm talking about.
Yeah. So before we get into it, Alastair, let's get a little bit of background on yourself in case people didn't listen to those last couple of podcasts we did with you. What's your story up to this point?
So we set up Ziyen 6 years ago. So that's just 6 years old now. So we're sort of moving out from startup stage. You know, like every startup, you go through different journeys. I know we did stuff originally, it was through Regulation A, and we did rounds of funding. We've got, you know, 350 investors in the company. And initially, we were involved in the information business and providing information on oil contracts. And then we got an opportunity to win our first oil contract out in the Illinois Basin. And Evansville, Illinois, that's my second favorite place in the world, actually. That's the place I visit most now. So it's, for everyone who doesn't know that it's out there, it's South Indiana, where Kentucky, Indiana, and Illinois all meet. So we acquired our first oil interest out there. So, and then we acquired sort of different leases, mineral rights, things like that. So, and then we started this process of, you know, as a start, because I'm not really like an oil company. I was registered as an oil operator in the state of Indiana. So it's been a learning curve for me, like everything's a learning curve in how to actually be a startup oil company. It's not as easy as it sounds. There's a lot of regulation to go through, but we've just actually achieved our grandfather clause, which means we're in good standing with the state of Indiana. So that's good. So a pat on the back from the guys at the Indiana Oil and Gas Association. So this allows us to sort of expand the business further in the state, so we don't have to bond wells. So essentially this is us going in there as a startup oil company. And then we got involved in the blockchain. And you know, I think for people to understand the blockchain and Bitcoin, I know sometimes I'm advised to talk about it a bit of basic terms, but for people to really understand out there, if they think when Bitcoin came along, Bitcoin runs on the blockchain. So you think of the blockchain as like an operating system, and you know, Bitcoin's like the first app. So if you think of what's happened with the internet, it first came along with email, and now there's 1,000 different use cases. The blockchain came along with Satoshi Nakamoto. Bitcoin was created. And off the back of that, 12 years later, now we're starting to get other use cases out with Bitcoin. What was so interesting about Bitcoin at the time, which people don't really understand, is because they just think about investing it as a commodity. It was actually this technology that allowed you to transfer money anywhere in the world instantaneously, avoiding banking charges and avoiding international transaction fees. So this was the technology that was created. And then from what happened is, because he's only created so many Bitcoins, and I know Bitcoins are getting mined at the moment, still there's that'll go on for another few years, but ultimately it sort of flipped from being a technology to also being a commodity. So it's actually two things. So that confuses people. Well, wait a minute, how can it be a technology and a commodity? Well, it just is, that's what it is. It's a bit like, and they're created. So there's a limited amount of Bitcoin out there, or there's always going to be a limited amount of Bitcoin. And essentially people think about it like it's digital gold. People call it fool's gold. But I actually think gold is fool's gold, because all it is a big shiny rock that we don't use for anything. And there's supposed to be lots of it in the Federal Reserve. One day we'll open up, 100 years, and there'll be an IOU from the government, So it's, but ultimately for people to understand, so now it's a commodity, it's going forward. So people are investing in Bitcoin. So they're investing in this thing to get a return. So essentially they're buying into digital gold. And then what started to happen is, other cryptocurrencies started to come along. Now, currently out there, I think there's over 14,000 cryptocurrencies. So this confuses people even more, because how can there be 14,000 versions of the dollar, the euro, the UK pound? But most of them aren't a medium of exchange. That's actually a stable coin. So when people are thinking of this is what a stable coin is. So when we were getting involved in the early days of blockchain back in 2018, 2019, we wanted to create a stable coin for the oil and gas industry. So the oil and gas industry spends $200 billion a year in sort of transactional fees, when they actually transfer money, because there's billions of dollars transferring about all the time, especially when you start going into places like Iraq and Syria and other parts of the world where they don't have good banking systems. Essentially they're not putting money into the local bank there, so it's, bounces about multiple banks, everyone taking a pinch of the pie. The problem with us, and this is when we came up with the concept Ziyen coin. Now, there was the oil coin concept before it. We were just wanting to take that and do it across all energy sources. The thing that really happened is and I went and did a presentation to a lot of the operators at some of the blockchain conferences, and they sort of liked the idea, but they don't want to use a brand name called Ziyen coin, and then B, unless you get adoption of a stable coin for the oil industry by the major operators, and this is your ExxonMobils, your Shells, your BPs, your Saudi Aramcos, and all the major players out there, essentially you've developed something that works, but it doesn't actually get used. So, I started partnering with someone who was involved in the space as well. His name's Dan, and then he was involved in the development of Oilcoin, and he started to help me in terms of, well, we can use this technology for another use case. So the other use case we realized was that in oil and gas assets, the way they're actually structured, the liquidity is locked into the life cycle of the project. And so what we've started to do is, if we can convert the sort of capital structure from percentages into tokens, then what that will do is it will allow liquidity at the back end. And that's really what the development in the market space has happened since last time I was on the podcast. Because up until November last year, people could create these sort of asset-backed tokens, or energy NFTs, and I'll explain that later. But essentially what it'll do is it's creating liquidity. So the problem is in U.S. domestic oil industry is, the operator will own, say, 50% of the project, the landowner gets 12.5%, and then, say, the other 35-40% is made up normally of accredited investors, family offices, investment groups, if it gets to bigger projects, pension funds and different private equity groups, etc. The problem they've got is they've got a non-op interest in the project. So you're an independent investor that owns interests into wells. If you're wanting to sell that interest, it's actually quite difficult to do. You own 1% of an oil project, you basically get cut a distribution check that's going to last for 20 years. But if you wanted to sell that, it's very difficult. Who do you sell it to? What's the value of it? And how do you sell it? But if we can convert that into a token, an asset-backed token, not a cryptocurrency, so if you convert this to an asset-backed token, what that will do is, rather than having 1% of the project, you might have 1,000 oil token one, or whoever the operator is. And then when it's listed onto an ATS, which is an alternative trading system, you'll be able to actually sell this through these types of platforms. And then what we've done is we've developed the energy tokens platform. We're partnering up with ATSs. We can create the tokens on behalf of the operators. They can have their own token now. So this is where your Shells and BPs and these companies sort of like the idea of what we're doing now, is because rather than having one underlying token, we're creating a token on your behalf, providing a service. They would have their own token. They would have 100% ownership of the token. And then they can go out there and people can buy into this from the crypto world into energy assets for the first time.
Wow, you've explained it exceptionally, Alastair. That was great. So
the podcast over. No, ask questions, please. So
now that this is an availability, I'm wondering, what does it have? What kind of an impact is it going to have on the industry in light of, every minute of every day we're hearing about the war in Ukraine and about drilling for oil and natural gas, and we're hearing about sanctions and Russia and Russian oil, and how does this all this geopolitical stuff going on, does that have a positive or negative effect on tokens that are being issued or coins?
Yeah, so I think in a way it's more to do with the sanctions the government's put out there. So if you think of, let's just do a quick recap of what's happening out in Russia. So Russia was supplying 670,000 barrels of oil a day to America, which I wasn't even aware of. I thought Saudi Arabia there. I knew Russia was selling some oil, but that's a huge amount of oil. You're talking like it's $75 million a day the U.S. is sending Russia for oil. So until even when the war is going on, we are still sending them $75 million a day in oil, in sales of oil. That's how much we were actually selling. And that was about 8% of all Russian oil sales. So if Russia's selling 40% of all gas coming into Europe from Russia, 80% of all gas going into Germany is from Russia, you can see how they have such a massive hold over the market space. And even though certain countries have done sanctions, so we're no longer buying Russian oil, but they're still be able to sell their oil because there's such a demand in the market space for that. So there's other countries that just cannot afford to basically switch off their entire electrical system and electrical grid because they need that as their power source, So that's the first thing going on. So when we did the first sanctions and the first few sanctions against these sort of oligopolists and all these sort of people out there and started to do stuff, until we start stopping or cutting off the funding that he's getting, and you're talking, it's like 900 odd million a day. So that's how much Putin's making from selling oil. So it's not like people are going, how's he funding this? 900 million a day sort of helps out. So it's
exactly.
Like he can keep doing this over and over and over again until we cut off the oil and gas from him. But then what you've done is, by becoming so reliant on his gas, therefore, he's got quite a hold on what's going on. So, the whole thing's so complex anyway. They try and make it simplistic on the news. We hate these guys because it's our enemy's enemy. You know what I mean? So that's basically, We love the Ukrainians because he's our enemy's enemy. But, you know, the whole thing's quite complex going back years, especially all these parts of the world, you know. It doesn't take away the fact that the guy's a total tyrant in what he's doing. It just means that there's multiple other factors. And then now they're talking about fertilizer, like a third of the world's fertilizer was coming out of Russia and Ukraine. So suddenly all the price of your goods, unless this stops, you're not going to be able to do it. And then there's wheat coming out. So again, about 25% of the global wheat market is coming out of Russia as well. So you can't sanction that because all that wheat basically goes to Africa. So suddenly it's like you're taking away a stable diet of a huge majority of people in Africa because this is where they get their wheat from, you know. So it's like, so there's so many multiple ways to do this. So this is really what's pushed the oil price up. But if you start to think about America and domestically, so, you know, they always talk about energy independence as this holy grail. But really, for America to actually go green, I believe they have to become energy independent first. Because there's no way you can become no way you can go 100% green, and that means 100% energy independent unless you control your entire energy source coming into the country. So, you know, you saw what happened with Russia. The same day that he put the sanctions on Russia, he's now going cap in hand out looking for a replacement of the oil. And you obviously go to Saudi Arabia, and then suddenly Venezuela, who was our enemy down there, you know, cap in hand. I don't suppose we've sanctioned your oil, but, you know, since we've got a bit of a shortage, can you start selling us a few barrels? You know, it's just like ridiculous that went on. Then over to Iran. It's like these sanctions in Iran of what's happened, and then suddenly there's a shortage, we need your oil, we'll forget about previous sanctions to get that as well. Whereby domestically, America has enough gas here that can do it. It's really government regulation that's in government policy that's come out there. So even with oil being over $100 a barrel, there's still a slow uptake in new oil. And then they say things like on the TV, it's Biden's press secretary saying, oh, well, you know, there's 9,000 permits, just drill away, we'll get that out. But you're talking about an 18-month runway per project, you know, unless it's a small one they can switch on. So it's not like you can just turn this thing like a tap. And then basically you've got to drill the projects. So as projects are there, so you've got to increase production now to hit futures because that's what we actually require. So it's not as simplistic as everyone thinks, you know. And then you've got to start to, you know, and it brings all the CO2 emissions part of it in terms of, you know, it's like everything. It's like it's why you want to produce oil in Saudi Arabia, which create more CO2 emissions out there because it's less regulated, and then we have to ship it all the way back here for us to use here. You know, so you're actually creating more CO2 emissions to take oil from out with the country and bring it in than you are to actually produce it domestically here. But if you don't produce it domestically here, it means that you can get a little tick in the box. It's the same with manufacturing. It's like all the manufacturing of steel used to be in like Detroit and Minnesota and all these places, high quality steel. But when they closed down and sent everything out to China, therefore the CO2 emissions to manufacture steel from China, which the quality isn't as good, doesn't last as long as it's here, and then we have to ship all that back. They actually reckon 5% of all CO2 emissions in China towards manufacturing goods is to service the U.S. market space. You know, it's like, so should we have those CO2 emissions added to us? No, because we don't want to do it. It's like Apple. It's like I keep saying to people, it's like we all talk about going green, but everything, you know, I'm speaking to from the new Apple iPhone 13, and I'll just let you know that this has been manufactured using coal. So everything that gets manufactured with Apple through Foxconn is manufactured with coal. So essentially the biggest tech company in the world manufactures all their products using coal power in China because that's who they get it from Foxconn. But then it's subcontracted to the company Foxconn. You know, and it doesn't count towards it. So it's like people need to just like open their eyes a little bit in terms of what's actually happening. But like we just like a simplistic argument. So when it's coming back to the oil and gas, it's like it's a complex thing, and it's just a case of, yeah, I get it, we want to transition, but if we became 100% in control of our own oil and gas production, therefore we would be an exporter like we were a net exporter. You're still importing because there's different qualities and different grades, but ultimately when other countries and these problems are happening, you're not going to be affected locally in the same way as you are right now, which just seems to me it's like that way you're in control of your own destiny. which is the key thing, I think, with what America wants, you know, and I think what every country wants.
And oil is used for a lot more things than just refining it into gasoline, which is, I guess, the root cause of why everybody wants to go green, because of gasoline-powered cars. But oil is used in a lot more things than people even realize in their daily life.
Yeah, it's over 4,000 products, you know.
Exactly.
You just like the plastics, refining of plastics. So anything you've got is made of plastic, you know, that's made from oil.
Yeah.
It's as simple as that. You know, it's just like, so what is not made from plastic in your house? You know, and then the thing is, it's like, and then it's the construction. The power from that is from coal plants in China. So it's like, in lockdown, I think there was about 170 coal plants closed down in the world, and 171 opened in China. 51 opened in India. So, you know, we can't keep closing down coal plants at the rate we're closing them down, but they're opening more coal plants, and they're bigger coal plants, big industrial ones out there. That's why India said we're not going to do any cutbacks to 2070. You know, it's a long time of them pumping CO2 emissions into the world. So are we still going to take their product, even though it's manufactured from coal, or are we going to basically bring all the manufacturing back, but manufacturing using, you know, either gas, nuclear, which are both essentially can be net zero, or even better, we can start putting big wind farms and solar plants. You know, solar's like so good. It's just such a good technology. It's just, that's the technology that everyone can go microgrid style. And it's, you know, start using that to manufacture stuff. Because as you manufacture things in these other countries, you've still got to ship them back. And you know, you're talking like these massive tankers, you know, and these things are put on in containers, you know, and they create huge amounts of CO2 emissions just shipping stuff around the world as well. So we don't take note of that type thing. I think what's going to happen with the blockchain, because it's all about transparency. So it's, you know, back to what we're talking about this technology and the transparency that's out there. You know, I say in 5 years from now, we'll be able to track on a granular level the CO2 emissions of the manufacturing of product, you know. So then people will start to realize, you know, am I going to buy this new Nike sweatshirt because it's a great brand, I love it, but all Nike stuff is manufactured using coal power. You know, they might have one renewable energy plant in the US, but everything else is subcontracted. They're even moving stuff from China to Vietnam because there's less regulations. It's coal power again. So it's like, people aren't going up in arms. So wait a minute, I'm still going down to Walmart. Everything in there, if it says made in China, made in Vietnam, made in India, it's made from coal. So why are we not going mad at the brands to do that? It's just like, we'll just focus on one thing. This is what's going to fix it if we do that. And then what happens is, it's like, you know, a place like San Diego is powered by gas, you know? So it's like, how are they going to get away from that? And then ultimately, the CO2 emissions from oil to coal is a huge drop. So the US, the reason why we went down in so much CO2 emissions is, one, we've got rid of all the manufacturing, which I don't actually agree with, but then two, it's like we're closing down the coal plants and we're, you know, refitting them with the gas, and it's just the CO2 emissions from gas compared to oil is a lot less, and it's a huge drop from coal to oil. So you go from coal to oil to natural gas. And Germany right now are wanting to basically get natural gas included to net zero targets for them, because it creates so little CO2 emissions. So suddenly, through nuclear and gas, they'll be able to hit net zero targets. And the Germans are smart, you know, and nobody thinks they're stupid in that. So it's like, it's just here, well, we can't include that. But and going forward, if it's not creating CO2 emissions, you can't put gas, natural gas, in the same bracket as you do with coal, you know? So it's like, the people are so simplistic. It's just like fossil fuels are green, and there's no middle part of this, you know? And then really from there is, people, you know, and then when you start doing it, you'll come onto this podcast, and I've spoken in a coal-powered Apple product. You can get onto your iPhone right now and then leave some comments and just let you know that's coal-powered Apple product. You've just done that. So why is everyone not going mad at Apple? Because it's just like, but we will. It's like people are starting to awaken type thing, and it's just like people need to track it. You know, we're starting working with a young guy that does CO2 emission tracking on the blockchain on a granular level for oil production. So what you'll be able to do, and now you've got the offsets, and he works with the Honduras government. They've got this massive forest that, essentially the airlines are buying into, and then he's acquired part of this. So oil companies will be able to do offsets in the same way as you would go on a plane, and you think, I'm still flying, I'm still going to save CO2, but because I've paid an extra $20, they told me they're going to plant half a tree for me, so I can sleep on the flight. So it's like, the guy Rory McIlroy, the golfer. You ever seen him before? Irish guy.
Oh yeah.
He's a multi-millionaire. Yeah. So he actually made one comment. He goes, I couldn't sleep at night knowing I was flying my private jet all over the world, creating all that CO2 emissions. But now I pay my carbon tax and offset it. I just sleep like a baby. It's like,
yeah, exactly. It's Alistair. It's kind of like that old deal. You buy an American flag and the tag says "Made in China," stuff like that, right? But let's get back to your right. Let's get back to your token platform now a little bit more. This is a platform, a trading platform that you mentioned. Is it live right now? Can I see this somewhere?
Yeah. So what it is? So Energy Tokens now is it's like a sort of information portal. So we update it with information, we're updating with podcasts, we've got our library on there. So, our original white paper about this, we did it in conjunction with the University of Florida, University of Michigan, Columbia University. There was a consultant in the World Bank, and we spoke about finance infrastructure and tokenization. So that information has been brought down, we've put on there as well. And then we're working with companies for analyzing data, etc. So once the tokens are listed, and we're just starting to make the tokens now, is they'll be trading on different ATSs. And then people are going to be able to buy these tokens essentially either through links from our website to wherever the relevant ATS is, or actually through Coinbase or MetaMask. So you'll be able to find these tokens going forward.
All right, so this is kind of like tokens. You're right. It's kind of like an OTC then, for providing liquidity for these people who are interested in purchasing these energy tokens. Is that correct? It's like a liquidity.
Yeah. So you think of so what's interesting? So back to like this. So that's a bit of the political background that my wife hates me talking about. So it's basically coming into what we're doing now is so the government regulations coming in. So ultimately, I have a different thought process than most people out here because I look at energy as a product rather than as a political tool. So, but you've still got government regulation. So even with oil at $100 a barrel, it's still, there's a lack of private equity, and the traditional energy banks are not wanting to put money into essentially production. So what does that leave? It leaves a gap in the market space. So what's going to happen is, everyone is going to want to invest in oil and gas and invest in this type thing. Up until now, their capital raising mechanism was through sort of private equity groups, through these sort of banks that were energy friendly. Because of regulation, they do no longer want to fund it, So suddenly they're looking for a gap in terms of the funding market. And this is where the crypto world comes in. Because up until now, if you're investing into Bitcoin, Ethereum, Cardano, that would say they're the three main cryptocurrencies out there that people will be aware of, you're not getting any form of distribution, like a dividend, The difference when you go into these asset-backed tokens is, as they produce energy, now we're not going to just do this with oil and gas, we're going to do it with solar and wind. We're just going to make it so it's generic, we're just a service like PayPal. So essentially it's like, once they create this token for that and it produces electricity through a wind farm, or it produces oil and it sells oil, these people will start to get fractional interests in the token coming back. And you'll be able to invest into these tokens with Bitcoin, Ethereum, US dollars, and euros. So what's actually starting to happen is it now creates this opportunity for the entire world out with a very niche people that used to invest into oil and gas, but suddenly all these crypto people out there who are looking to invest in essentially an asset-backed token that gives them distributions. And that's what's so exciting of what we think's about to happen is because suddenly it's like you've got millions of people in the crypto world who've only been going after certain things. Originally, it was the first main cryptos. Now they've been going into NFTs. I look at these things as energy NFTs. It's an asset-backed token. It's a lot more complex than your sort of NFT when you're doing it against a piece of digital art. What this is the tokenization of physical assets. And this is the cusp of the massive change that's about to happen for people out there. You've not missed the boat. This thing's just going to start to happen now, and in 30 years from now, everything's going to be tokenized. So what they're going to do is, in the same way they've been tokenizing digital art, now you're able to tokenize physical assets. And then people are going to be able to own fractional interest into these physical assets through tokens. And as it produces energy, they'll get distributions. But just unlike the current market space whereby you've got your 1%, you're in for the lifetime of the project for 20 years, right now under the new system is you'll be able to sell this at any point because you'll be able to go onto an ATS and sell your fractional interest into these asset-backed tokens.
Yeah, it's awesome. That's really great stuff. And you hit the nail on the head where you're targeting the oil and gas industry for the most part, but you can do this for real estate and art and everything else that you mentioned as well. So it's a great thing.
Real estate out first. I think real estate was the first one they started to do it. So you're starting to get public infrastructure, things like that. And I think the real estate projects, people think, I don't really want to tokenize my house. So what does that mean? You know what I mean? Because they think of it, it's terminology that confuses people.
Correct, but we're missing the actual physical platform to make these trades happen. That's what this industry needs, I think. The place to go where
there's multiple ATSs. They call them alternative trading systems, and there are three big ones that opened up so far are Securitize, T0, and North Capital's one. So they're the three that are there. But the NASDAQ's talking about doing one shortly as well. And then these token exchanges are, there's ones in Hong Kong, Singapore, Dubai. So they're now popping up. It was just the end of last year they finally got regulated by the SEC. So the thing is, these tokens are different from a cryptocurrency because essentially it's going through a transfer agent. So even you hold the wallet, you'll never lose your tokens. You can't lose them anymore because the transfer agent knows it's you, and you've got to go through a KYC to be able to open a wallet. So you've got to upload your passport, and so they've got the details from you. In the same way as any accredited investor check, it's like a KYC. It's the same thing, Ron and Vicky. So all that's happening now is you're having to do the same thing to buy tokens, and then it means that people realize, well, I won't lose this. But I think for the whole world out there is, up until now, you've never been able to invest in an energy asset that gives you distributions. We're looking for investments. If inflation's at 8%, I think it's closer to like, a lot higher than that anyway. So it's basically, if that's going to 8%, you have $1,000 in the bank. A year from now, it's going to be worth, $920, say. So that's what inflation means to people. If you don't understand what inflation does or economics, I studied economics at university, and it was just like the higher the inflation is, the more it pushes people below the poverty line. It's like a stealth tax. This is whatever the people want to describe it. But it means if you've got your money in a bank that's giving you next to no interest, a year from now it's going to be worth less. If you've got a job right now and you have had an 8% pay rise since last year, you're going to be worse off than you were last year because of inflation at that point. So suddenly people are looking at different investment choices. And up until now, it's normally been shares that people invest in or property. But through this is now you can invest in assets that give you distributions. And you might think, well, I want to invest in this wind farm or invest in this solar farm. And I can own a little piece of a solar farm. I know it's going to be good for the next 20 years. It's going to give me distributions. And then it's somewhere that I put my money where my money can grow into an asset that can do this. And by this tokenization, when you start to think of it, it just starts to open up absolutely everything. And, back to real estate, when people are tokenizing a real estate project, Ron, I know you have a real estate background, it's easier for people to tokenize, say, a shopping mall. So if you tokenize the shopping mall, people can all own interest in that shopping mall. And as it gets rent and as it gets, makes more money, the mall itself and all the places are full, people can get distributions from owning a small percentage. But what it does do is anybody in that space who's looking to be the guy that runs the shopping mall or the person who's going to run this energy project. What this does is it provides an additional tool to raise finance and investment. And then what's interesting about it is the entity owns the interest. So, I've just come back from Kentucky and Indiana and Illinois. So, it was a trip there with Shane Fraser, our oil director for the Oil and Gas Association, AGM, for all the operators. So, I'm speaking to them about the project. Now they're interested in the project because they see the difficulty in raising capital. So they like the idea of this. They like the idea of having their own token. One of the biggest barriers to them is, well, if I buy an interest, and I own interest in about 100 oil projects right now, or the company does. So when I'm buying an interest into oil projects, they've got to update all the information. They've got to update the courthouse. You have to go through this sort of antiquated legal process that can take up to a month before the interest is transferred into my name and it's legally registered. What actually happens is the token's like its own entity, and then the token owns the interest. So for all these oil operators out there thinking, is this going to be more difficult because now I'm dealing with three, rather than 20 rich guys from Texas, I've got basically 300 crypto people from all over the world coming in and own part of the token. But it's not, because they're only dealing with the token. So the token owns the interest, and people own interest into the token. So for the oil operators or energy operators out there, it's actually easier because you're only dealing with a token holder. And to begin with, you're the majority holder of the token anyway, because it's your token. So when you first start off, so it's even easier than that, So the whole process is going to make this sort of antiquated way of us doing stuff change, like technology.
Yeah. Well, let me ask you a question now. You said earlier in the podcast that you set this up as a stable coin. Before we close this podcast out, can you explain a little bit more about what the stable coin really is?
Yeah. So I think for people out there, so what happened was these stable coins idea. So we were placing US dollars to use a stable coin. But the problem is, it's like a stable coin is just and then they benchmark them against the dollar. So a trade is basically a digital dollar. The federal government's about to launch their own one anyway. So they're going to, everyone's talking about this digital dollar. They're going to run the digital dollar, people. They've already announced it. They've posted their first white paper on it. It's all going to start to happen anyway. So this is like a stable coin. So rather than using US dollars and banks and stuff, you can use this coin to do it. What actually starts to happen is when you start to think about that. So that's the first thing. So that came along. So all these other cryptocurrencies are called coins, but they're not actually coins. They're actually assets that have been tokenized. So it's a bit like, how can we have 14,000 cryptocurrencies and 14,000 currencies? We don't. So many of them essentially, and this is are securities. They're basically securities. They're asset-backed securities. So it's like, how many assets are in the world? Well, there's more than 14,000. So people need to realize they're just using the terminology coin, but in going forward, we'll start hearing the word token more and more and more, and then people realize it's not a coin, it's not a cryptocurrency. And that's the next phase of the technology that's coming in, and it's just part of the whole thing growing out from there. I think the transparency piece of blockchain as well, which is key, because essentially once something's hashed on the blockchain, then it's transparent and people can see this information. You can't go and manipulate the data. You can override it, but you can see the previous entry in it. So this is why governments and that don't like the idea of the blockchain, because essentially what you're going to be able to do is you'll be able to hold the government accountable to what they're actually spending their money on. And, wouldn't that be great if we could just log into a system and just say, well, what's the government actually spending money? Where's my tax dollars going, Wait a minute, we just spent $1 trillion in weapons. So it's like,
I'll tell you what,
schools don't get anything done.
This was an interesting podcast because we went over, the NFTs and the confusion with blockchain and crypto and currencies and the energy field, how it applies to oil and gas and stablecoins, et cetera. But I'm sure somebody who's listening to this may have more questions and want more information or even get involved in your platform. Alastair, what's a good way to contact you?
Yeah, just go to our website, either Ziyen.com, Ziyen.com, or energytokens.io.
Okay, .io, very good. So Vicky, what do you think about
There's one thing I wanted to explain before I went, actually, Ron. I forgot about it. When I come on there, I'll tell you, we'll talk about this, and then an hour later, I've not actually talked about what we're going to talk about. So but it's to explain to people out there what an NFT is, right? So it actually stands for non-fungible token. So what people need to understand is what's the difference between a fungible token and a non-fungible token. And this is like the basics. So a fungible token is like a US dollar. So if Vicky's got $5 and I've got 5 singles, I know I can swap my 5 singles for her $5. And that is a fungible token. We know the value of it. The non-fungible token is essentially you can't swap it for anything else. So it's got its own value. But what these ATSs do and what cryptocurrency does is it converts the value into Bitcoin or Ethereum on an ATS, and then we can use that as a medium of exchange. So a non-fungible token is sort of its own price, where a fungible token is like the US dollar. When I speak to a lot of people about this, they just hear the word NFT, so they can't get their head around what the difference is. But if they think of fungible token, US dollars, non-fungible token, its own pricing, but then what the technology's done in terms of the blockchain and ATSs and cryptocurrencies is we've now got mediums of exchange to actually, convert this into Bitcoin and then either put in your wallet to US dollars, etc., or you can sell this and get it in Bitcoin, Ethereum, and stuff like that as well.
Yeah, that is such a great
explanation. Yeah.
And it's so hard to find that. I mean, Vicky, you know that, right? You go everywhere. No one's really defined these terms, but on our podcast, we bring in guests like Alastair who do it really simply. Isn't that great?
It's perfect, because it's so complicated and many people can't wrap their head around it. Alastair just nailed it.
Yeah, he did. He did for sure. And Alastair, next time I go to New York, I want you on the flight with me because we could talk about this for like 5 hours. It'll go really quickly.
That's it, man. I only go to New York once a year, when it's a bit hotter in the summer. So it's like right now it's still a bit chilly for me to be heading up there.
Yeah, it's for sure. So, well, anyway, listen, Alastair, thanks so much for being a guest on the show again, and we really appreciate your insights into these things, and you're always like head on, great information. So, thanks again for being a guest on the show and taking the time out to talk to our audience.
No problem at all. Appreciate again the opportunity, guys.
Yep. And
Absolutely.
Vicky, thanks again for co-hosting this episode. Folks, you're listening to the Mappable USA podcast at mappableusa.com. If you go to that website, you scroll down, you'll see all our syndication sources. Pick the one you like best, and you'll never, ever miss another one of our episodes. If you want to be a guest on the show like Alastair was today, there's a guest tab. Click on that, fill out the form. We'll see what we can do about getting you on the show. And if you like what you heard today, send us an email at info@mappableusa.com or just leave a comment on whatever page you're listening to this on right now. So thanks for listening. Thanks for your support. We'll be at you next time with another Mappable USA podcast. Have a great week, folks.